Hi, my name is Swapnil Karkare, a chartered accountant and an economist, and today we are going to review markets, economies, and events of September 2025. Indian markets ended flat this month. Actually, it had started rising, but Trump was the mood killer. By 18th September, Nifty was up 4%. On 19th September, we all know what Trump did. H1B Visa fee was hiked to $1 lakh, which dampened the market mood, and Indian markets have started dwindling thereafter. More on this news later. The BSE IT index is now down 3% in September. It was one of the major losers. The highest loser, however, was consumer durables, down by almost 5%. Even the FMCG sector suffered a 2% hit. This comes as a surprise given the GST rates had changed, and it was expected that durables and premium FMCG products will get a boost. We will have to wait and watch how GST impacts markets and economy. I have been saying and writing about it that GST cuts impact will only be seen in some sectors like consumer durables, premium FMCG products, auto sector, insurance, and a few other sectors. It will trigger a short term demand, but it will not be a sustainable one until we fix the jobs and income crisis. Necessities were already at 0% or 5%, so nothing has changed there. A few major changes have been in couple of sectors which are in general not used by a lot of people. For example, it is estimated that only 7% of Indian households have ACs in their house. Then around 16% of families have all three major equipments like TV, fridge, and washing machine. So the impact is not very large. Then around 70% of GST revenue for the government came from 18% tax slab. The revenue loss or the revenue foregone for the government is around 48,000 crore rupees, which is just 0.13% of GDP. Therefore, this is not a stimulus. It is a course correction which was pending for a long time, and hats off to the government for implementing it. Therefore, I believe that although this is a welcome step, it will not be a catalyst for the economy. Sure, it will help some consumers, it will help some sectors, but it will not, push or lift the GDP growth by a percentage point or so. Now, moving back to the markets, metals were the biggest gainers. Hindustan Coppers, Hindustan Zinc, Nalco, and SAIL topped the charts within metal sector. Hindustan Copper was up 43% just in 1 month. Unfortunately, I had missed this rally, and there were two main reasons. First, the corporate results were very good, and second, the copper prices worldwide have risen. More on this later. Apart from metals, PSUs, auto companies, oil and gas, and power sector rose too in September 2025. Now, coming to global markets, volatility was up thanks to Trump, and Southeast Asian stocks led this month's charts with KOSPI, which is Korea's index, gained 7.5%, followed by Hong Kong and Taiwan. Some developed markets like UK, Australia, and Switzerland have lost marginally this month. In the bonds market, yields of Turkey, Russia, and Korea went up, while those of South Africa, Brazil, and Canada went down. Now, commodities market. First, energy sector. Natural gas prices were up 10%, uranium by 5%, ethanol prices, however, were down by 8%. Did your petrol prices come down? Well, let's not go into it. Second, metals. Silver was up 13%, followed by platinum and gold, both up by 10%. Copper was up 7%. Lithium, however, was down 8% and steel by 1%. September turned out to be very extraordinary for metals, with all big fours, which is gold, silver, platinum, and copper, rose sharply. Let's unpack this. Let's start with gold. Prices shot to record highs in late September after US Federal Reserve cut interest rates. With a few more cuts expected, gold prices have shot up. Lower interest rates make non-yielding assets like gold more attractive. There's less opportunity cost for holding bullion than bond markets. Second reason, US government shutdown. Think of it like another economic or fiscal uncertainty. Third reason is piling up of gold by central banks across the world. This has been a phenomenon since Russia-Ukraine war, and it is not going to stop anytime soon. China, India, Poland, Turkey all are ramping up on gold. Fourth, weak dollar. Weak dollar makes commodities look more cheaper. So it is good to hold. Moving on, barring gold, all others have supply issues. Silver, platinum, and copper. We have discussed about silver and platinum in previous monthly wraps. This month, copper is added to the list. There was a deadly mudslide at Grasberg mine in Indonesia, which is the second largest copper mine in the world. It was shut in the late September, and that has lifted copper prices because now a shortage is expected. Goldman Sachs shifted its 2025 market balance estimation of a surplus of 105,000 runs to a deficit of 55,500 tons, which is 2.6% of 2024's production. This is huge. And add to the rising demand of copper due to electric vehicles, renewable energy projects, and grid upgrades. Overall, the industrial demand is actually constant. Like if you see the current demand pattern, but the expected demand is higher. On the contrary, supply has been low. There is a year-long shortage in both the markets, silver as well as platinum, and therefore we are seeing rise in prices of these metals. Now, to the next news. There is another layer of uncertainty for Indians and Indian IT companies, and to some extent US IT companies too, which is the H1B visa fee hike to $1 lakh. The announcement was like very huge for everyone because everyone knows someone in their family with an H1B visa. So I had wrote about it in last week's Trendlines newsletter. If you haven't subscribed to it, I would recommend you to please subscribe because you are missing on my articles. So I will quickly summarize here what I have written. Many Americans, especially the hardcore right wingers, believe that H1B visa steal American jobs, but the research shows otherwise. They don't steal American jobs. They actually raise wages for Americans and drive innovation within the economy by contributing heavily to the patents. They also pay billions of dollars in taxes to social security and also spend locally, which has a multiplier effect which uplifts the regional economies. All the data, in-depth information, and research related links are there in the article. So I would recommend you to please go and have a detailed information. Yes, there are flaws in these visa schemes because some firms misuse those laws, they underpay workers, or they don't hire locals appropriately. But these are like governance issues and they are not like very, it doesn't have like adverse impact on the US economy. The bigger worry, however, is that if things go as planned by the Trump administration, the visa fee could probably cost $14 billion to US companies. If Trump administration believes that tighter visa rules will, deter companies to hire foreign workers and they will bring more jobs in the US for Native Americans, then probably they are wrong. Because research has shown that the competition isn't between foreign worker in the US versus Native American in US. Instead, the competition is foreign worker in US versus outsourcing that job to other countries. So, in a way, having an H1B visa worker is kind of saving that job or keeping that job in America, and hopefully that reduces unemployment levels around that job. But if it completely goes away to another country, then it will impact the GDP of US also. So that is a problem. And this is because the rules say that companies should open H1B vacancies only after they have left with no other option. If visas are stricter, company will simply outsource that particular role outside of US and US economy will probably lose out. It's a lose-lose situation for everyone. I don't know what Trump is up to. For India's $283 billion IT industry, this looks smaller than before. Firms have already reduced their visa dependence. They are hiring more locally in the US or bringing in jobs directly to India, and they are also training the locals in US. So it's like a very nice situation right now, because executives say that this will be a temporary shock, and because currently H1B visa staff now accounts for just 1%, not even 1% of the total strength of employees in all the leading IT companies. Now, some talk about brain gain, because, like, if talent stays back in India, it will help India. But frankly, Silicon's Valley scale cannot be replicated in India. Forget India, it cannot be replicated in Canada, Singapore, Dubai, or any other European nation also. And even if we assume that some will stay back and help India grow, unfortunately, India right now does not have that much job opportunities to cater to such large labor supply. Plus, we have low R&D, patchy patent rules, and infrastructural gaps. Then there are higher taxes, poor quality of living, and all these things are real issues which have discouraged many people for a very long time. And a lot of people actually dream about going abroad. They want to stay abroad, they want to go abroad. Yes, everyone would love to stay here if they can get the similar lifestyle and similar money and work as they get outside. So if we are successful, if we reach that level, which is a very long process, I'm not pessimistic, I'm optimistic about India. But right now it doesn't look like that we have reached a level which we can become a substitute for Silicon Valley. No, that is going to be a very foolish statement. I believe that things will go back to normal, but we don't know when. Trump wants us to sign a trade deal according to his terms and conditions, and we are not signing it because we have some reservations. And I have already done a video on that, why agriculture sector is the biggest hurdle in the US India trade deal, and why both the leaders are probably adamant on their positions. So I have done a detailed video. I recommend you to watch that video for a detailed and in-depth understanding of why both the leaders are firm on their stand. Now, let me know your thoughts in the comments. What do you think about the latest visa norms? Do you think that things would go back to normal? Also, comment about the GST. What are you buying these days? But before that, please hit the like button and comment, share, subscribe to the channel, spread the word, and see you soon with the different topic next time. Thank you.